Thank you very much, Constantino, for the wonderful introduction, and my most sincere appreciation to all for the wonderful reception. It's an honor and a privilege to be in Athens today, and this is my first visit to this lovely city. So I'm going to be as brief as possible because I'm really anxious to get out there and do some sightseeing and taste some of the wonderful food you guys have here. Seriously, though, I'm humbled and honored by the opportunity to be participating in the 2010 Banking and Money Conference, and I thank the committee for the invitation and all those involved in putting this wonderful event together. This year, I've been in about, I'd say, a dozen or so different conferences and workshops and seminars, primarily in the U.S. and some abroad. And Greece is always the source of much debate and much contention, as you can imagine. But nonetheless, I don't think there has been one conference that I've attended that has been solely dedicated to Greece. And I think it is very fitting, very timely, and indeed very appropriate because there are a number of issues and concerns, especially coming from the U.S. and sitting in New York, trying to get a sense of the realities of what is unfolding here in this country can be quite challenging at times. And I think this event, I hope, will help shed light on many of the risk concerns that I certainly have and that you probably are accustomed to. And thus, I welcome the timeliness of this conference. I think this event should also be taken part in New York because it would certainly warrant a great reception and much interest. I can tell you that for sure. Obviously, the past couple of months have been quite positive, I would say, in terms of the perceptions Greece is sending to the markets. The sense is that the government is moving in the right direction and implementing this fiscal consolidation program and this structural reform agenda that is quite ambitious and certainly very necessary. And that has led to some positive comments from the IMF, the ECB, and the EU in terms of the projections that they're estimating at this point, and in terms of the strength of the program that is being implemented. And that in turn has paved the way for the current administration to go out and implement a series of roadshows that have been rather well received. And to boot, you've had the government handle a number of successful bond auctions. And that has certainly helped assuage this feeling of a widening sovereign risk crisis in Greece, and to a lesser extent, however, throughout Europe. But nonetheless, I think it's important that we stay true to the underlying risk concerns that continue to permeate and continue to dampen the Greek country risk profile. I, for one, believe that this is still a country with critical inherent risks, underlying fragilities, and deep structural vulnerabilities that will continue to impact the macroeconomic outlook, the political outlook, and to probably a lesser extent, the banking sector conditions. And I think these manifestations will continue as long as the government does not deepen or strengthens this fiscal reform agenda and the structural reform program. As long as the government really remains, we need a government that continues to strengthen this resolve. I also sense that we need to see more political and civic responsibility. That trend also needs to be strengthened in order for it to bring about, to put Greece on a path of sustainable economic growth and development. And as such, we continue to view the Greek outlook as considerably shaky, an outlook that is underlined by cyclical weaknesses and widening deficiencies that really cannot be masked by a sizable IMF program or improved financial market conditions. But nonetheless, I hope this conference will help shed light on some of these concerns that we have and will hopefully help us address new issues and new views, particularly the views that you may have, because, like I said before, it's tough to really get your hands across the Greek situation from abroad. You guys are living it, breathing it, and smelling it. So it's definitely, your points of view are definitely much warranted. I want to talk to you today about how we view the situation in Greece. I'm not going to sit here and talk to you about the crisis, what happened, what should have happened, how the government could have handled it differently. These are by far not black swan events that unfolded here in Greece, and thus it's imperative for us in Wells Fargo to come to grips with the realities. And it's been quite difficult at times trying to educate senior management on how to view and how to gauge the appropriate risk concerns that are manifesting here in Greece. And I sense that clearly what stands out the most in view of these manifestations is an underlying macroeconomic uncertainty and, of course, political risks. We're not too concerned about the state of the banking sector here. Obviously, it's an industry that took a hit with the crisis, but for the most part, we do sense that the banks are well managed, and they should be able to withstand the crisis. Our main concerns are in terms of macroeconomic policy, the way the government engineers the stabilization of the economy, and with regards to the political system. Out of these two, the most pressing concerns is, of course, the macroeconomic environment and the need for a sustainable recovery. Again, this government has made tremendous progress at the outset. We're very gladdened by that. And much of the deficit cutting measures have certainly received a well-balanced response. At the current pace, it is still assumed, and we certainly agree that the government is on pace to meet this 8% fiscal deficit, 8% of GDP fiscal deficit target that has been outlined. Nonetheless, we're beginning to see some cracks in the program in the sense that there have been reports that the government has been somewhat delayed in its revenue-generating measures. But I sense the overall approach to reduce the Greek debt profile, which is by far the most principal constraint on the macroeconomic profile, is in hand. The hard part of this adjustment process is obviously still ahead of us, and one thing is passing a law in Congress. The other thing is implementing, and that's why we're a little bit hesitant to gauge the strength of this fiscal reform agenda. The Greek record of tax collection has been, with all due respect, abysmal. Spending patterns here in this country have, throughout the years, been also equally stressful. And I sense for now, you have a fiscal consolidation program that centers at the central government and hasn't really reached and hasn't been weighed down to the state sectors, to the corporate sector. And thus there are concerns about sustaining this fiscal adjustment program. We also are a little bit hesitant in terms of how the government comes around to responsibilizing itself on managing these public accounts. Obviously, it has a very porous record, and throughout the years, it has demonstrated a very weak capability in managing these public accounts, and thus there are concerns on that front as well. And also in educating the Greek citizenry and the Greek corporates to become more corresponding to their tax demands. These are all concerns we have in terms of sustaining this consolidation process. And I think the most principal one is really in terms of the government strengthening its own institutional capacities and its own governance practices in view of enforcing and supervising not just the regulations in the tax code, but also in managing economic policy going forward. The other concern that we view is the fact that for all this fiscal consolidation process that you're going to have this year and the next, and hopefully beyond 2014, this sizable, and it is a sizable and a very politically sensitive structuring endeavor that you're carrying out. But for as much consolidation as you have at this point, it's going to be very, very difficult to bring about a sustainable reduction in the public debt profile as long as the economy continues to contract. And here's the one key feature that we continue to monitor, basically, because this is an economy that continues, that remains under severe stress, and really a concerted fiscal adjustment process, one that brings about a correction in the primary balance, must be accompanied, it has to be accompanied by steady and profound economic activity. And really, that is the only measure that will help bring about this reduction in the public debt profile, and will certainly help ease the high interest costs that the country is bearing. And to that, we see that growth prospects at this point remain very, very weak. It is estimated that the Greek economy this year will contract anywhere between 4% and 5%. We're certainly on the low end of that, and towards the 5%. And looking into 2011, negative activity is again expected. It's a very daunting times for Greece to be in a crisis. Obviously, the global recovery remains rather tepid, rather lethargic. The situation here in the Eurozone is equally concerning in terms of the economic prospects. And of course, there are serious sovereign risk pressures that are still manifesting themselves throughout the region. Much of the policy stimuluses that were implemented throughout the world are being phased out. And on top of that, demand conditions throughout the world are and certainly here in Greece, are clearly at a crossroads. And thus, the growth outlook is particularly concerning. Obviously, Greece can no longer count on the demographic boom that was observed in the 60s, 70s, and 80s, when Greece was still a developing economy. Today, we view Greece as a mature economy, and with an increasingly aging population that will continue to impinge on consumption. And as such, the main levers or the main engines of economic activity at this point are bestowed on the public sector and on exports. And we all know the precarious states that the public sector finds itself in, and certainly the competitive structure of the export industry is equally concerning at this point. And thus, I sense that in the coming years, Greece must not only implement deep fiscal adjustment and structural reforms, but it must really work to make its economy more competitive. And these are very, very difficult policy measures that will need to be enacted to bring about and strengthen not only demand conditions here in Greece in terms of bringing more flexibility to the labor markets and attracting more investments, but really making exports more competitive. And the only way I see that is basically by increasing productivity, or by bringing about a sharp correction in the relative prices and wages Greece pays vis-a-vis the EU. And again, these are very, very difficult measures to implement, as they will entail a complete overhaul of their whole economy, of the entire economy, and it will certainly bring about the need to reduce pensions and to reduce the size of the public sector, to cut back on benefits, and bring about healthy cuts in the labor market if Greece is to become more competitive and really challenge and become a force within the EU. And with these difficult political measures, I think it's a good, nice segue into our principal concern with Greece, which is clearly the political dynamic. As a Greek watcher, as someone who sits in New York and tries to make sense of the chaos that is unfolding here, which actually seems fine to me. I don't think it's up. You know, the news. one realizes coming here and stepping on ground here that we really can't take everything to heart in what is reported out there. I really don't think it's that chaotic or that politically viable, to be honest with you. And certainly the administration's efforts to bring about this fiscal adjustment process has been well received, and it clearly sends positive message. And we also get the sense that the protests are dying, that the social backlash is easing, and that the public outcry is diminishing. I don't know if that is the case. It certainly seems that way to me from visiting here, but you certainly could add to that. But the diminishing political risk concerns are certainly strengthening from the market's perspective, and I think that's a clear positive, and probably one of the principal drivers in the improved market sentiment towards Greek asset prices. That said, taking all that into account, it is clear that the political outlook in Greece remains of primary concern for us. I don't need to remind you or affirm to you about the obstructive political and social climate that has systematically thwarted progress and development in this country. For all the benefits of EU membership, OECD status, Euro adoption, throughout the years, this is a country that has been hobbled by a political culture ridden by corruption, bureaucracies, gross inefficiencies, deep inadvertent management of the economy, let alone by a civic society that has been dealing with a government that has been accustomed to lying, to cheating, to stealing, to just gross corruption. So really, the political manifest here is quite precarious. I cover the emerging markets, and by no means do we classify Greece as an emerging market, but the political outlook here, the political conditions that have existed in this country are very emerging market-like. And thus, today, you add on top of that a very populist tendencies, radical labor unions, and an exasperated civic society. And it's, you can't really fault us for having some doubts about the sustainability of this adjustment process. There are also concerns that we have about what happens with the change in government. Will the new government in place be committed to this fiscal adjustment process? And what are its policy incentives? Are these efforts that we're seeing now in Greece, these efforts to move Greece ahead and to bring about a concerted restructuring, not just of the economy and not just of the fiscal accounts, but of the mindset, are these measures going to be available across both political aisles? This is one of the concerns and a principal view that we struggle with on a daily basis. So for all intents and purposes, the sustainability of this current adjustment and reform process will continue to remain uncertain. And I think the only way that will ease up on the situation is with time. Only time will tell what the commitment is across the political aisle. Only time will tell how deep this adjustment process is, and only time will tell how the Greek citizenry and the civic situation here improves and becomes more accepting of this program. The risk is whether the markets, and to a lesser degree, the authorities, in view of the IMF and the EIU, will provide Greece with time. I certainly think they will. I really do not believe the IMF, the ECB, or the EU will let Greece hang out to dry. It's just too politically costly for them, and thus I do see Greece maintaining this resolve as long as there's backing from the multilateral community, and this, of course, should help eventually reduce the threat of a default or a restructuring event here in Greece. In closing, I sense that there's growing hope that this crisis, which has devastated and incapacitated Greece like nothing in modern history, at least I believe so, I sense that it will hopefully bring about a change both across the political and macroeconomic policy spectrum. But however, that change that we're talking about needs to be driven by a change in culture. And hopefully it becomes more accepting of a culture that is more emphatic with accountability, with transparency, and with prudent macroeconomic governance, and one that will ultimately foster greater civic responsibility and improve governance measures that will eventually allow for more effective macroeconomic policy management that is needed to put Greece on a long-term pattern of growth and social development. I thank you for your time, and I look forward to the remaining of the conference to engage in other issues that you certainly can provide more insight and teach me about the situation here in Greece. I thank you.
Let me start by to warm up the audience. Let's say, do you believe that we should have a Keynesian or more monetarist approach in the handling of the Greek economy? Of course, given the fact where we are now, okay, with a deficit, it's a little difficult to say, but what is your view?
That is a very difficult question, I must say. The Keynesian or the non-Keynesian approach to really revitalizing economic activity at this point in Greece you would have to opt for the Keynesian because the Greek system is so withered and so collapsed, and the Greeks need funding as much as they can get it. But then again, there are deep structural, you either, it's like having a patient in the hospital, you either administer the medicine that is needed for him to get better now or string him along until he dies. And really, I think that hopefully with what the current administration is doing is administering that measure, that painful measure that is needed at this point to bring about a greater stabilization of macroeconomic policy and of management of the economy. And thus, some of the Keynesian approaches that we're accustomed to, such as the ones we're seeing in the U.S., which it's arguably whether they're working or not, really can't be implemented here at this point because the government is broken. This is a broken government, the public sector here, the public finances are in deep disarray. So the Keynesian option is probably not available at this point.
So you're talking about Greece recuperating at some point and going to the markets. What is the signal that Greece is ready to go to the markets? What will the markets require in order to lend Greece at a reasonable rate, which would be around 5%, all included? Or less.
At this point, there are a number of Wall Street firms issuing buy orders on Greek government debt at this point, very, very short term. But in terms of Greece going to the back to the markets, really, until you see a very concerted and broad-based deepening of this fiscal reform process that we have in place right now, and until the Greek numbers start looking a little bit rosier, I really don't believe the Greeks will be tapping the markets. There's just too much uncertainty. Signals, you have to have better data. I think the key is in the data. Until you have better economic activity, recuperating economy, a reduction of the current account deficit, which is a primary concern, and of course the fiscal figures. The fiscal figures need to be improved. I also think the manifestations on the political front are very, very important. And if the government continues to make the positive progress that we've been seeing, that could certainly speed up the proximity in which Greece taps the markets again. At this point, I think the progress has been good, and this is a wise government in the sense that they've come out and done a couple of roadshows. They've tried to drum up support for the situation. They've piggybacked the positive comments made by the IMF and the EU into improve risk perceptions. So I think I definitely think they're handling the situation well. And if that continues, we could definitely see Greece tapping the markets before many expected.